Hey, what's going on, guys? So, after we had a couple okay days in the stock market, the question arises, is it time to start buying again? Is it a good time to start, averaging into positions? And is the stock market finally recovering after seeing some of the biggest red days and volatility days that we have seen in a long time? And I'm here to tell you guys that I don't think we are quite there yet. I don't think that we are even close to being there just yet. So I want to bring your attention to a few things that you should consider before thinking about going long into the markets. So right now I'm looking at Nasdaq. So as you guys know, Nasdaq is the futures chart for the Qs for tech stocks, and I want to show you guys um this key level that we are coming into today. So we can see markets are up. How much are we up? So we're up 0.65%. So you can see 0.65%, and the S&P 500 is up 0.37%, and the US 30 is up 0.31. That is the Dow. So markets are green today, but there's a few things I want to show you guys. So you can see right here on NQ, NQ is making some highs, but we can see right where we are trading into. So we have this key level right here around 19,200. So you can see this strong demand level that held a few times, and you can see that sharp sell off once the negative news about tariffs started coming out. We broke below that level. We came back and we retested that level, and we had a failed breakout, and then markets dropped 6% from that level again. And you can see we are clearly struggling to get above that level. So right now we're coming back to test this level again. And in my opinion, I don't think that markets will be able to successfully hold. They might be able to slightly break above the level, but I don't think we'll be able to hold above this level, because this would be a very bullish move until we start seeing some really good news. If we start seeing some deals, if China and the United States make a tariff deal, then maybe we can finally see that breakout and that hold above that 19,230. So we are still bearish. The bears are still in control. We're just kind of in a consolidation state right now. So that is the Nasdaq. If we look at the S&P 500, we have the same kind of picture going on, but this is the 5560 level. So we can see the strong demand level, and that is the tariff day when we broke below that level. We came back, we retested it, dropped 6%, and right now we are just kind of consolidating. So this is a boring past couple days. I avoided trading altogether because if you look at the volatility index, you could see there's not much traders trading today. I'm gonna bring you guys' attention to one more thing right here, which you guys should always be looking at, which is our volume. So you can see right here that volume today is 24 million for the S&P 500, but average volume is closer to 93 million. So that tells you there are not a lot of active traders in the markets today. Therefore, you probably shouldn't be trading. It's just a lot of sideways action, and you're going to just be wasting a lot of time. So right now, let's look at the Dow. So this is the US 30, the Dow Jones. And as you guys know, the Dow Jones consists of 30 of some of the biggest companies in the world. And we have a similar chart. We have this major demand level around 41,000. So it's an even 41,000. We came back, we retested this level and had a sharp break below. We are coming back testing this level again, and it is matching up perfectly with our 20-day moving average. So a test of this area will be very interesting to see, and this could be the area where I would be looking to short again, because like I said, we are still bearish, and until we start seeing some really positive news come from the president, come from the economy, then unless we see something really good come from there, we are still bearish and buyers will hesitate to buy around that area. Another thing that I want you guys to always be watching is our VIX index. So we always watch VIX because VIX tells us how to trade. So for the trading day, whether we are at a demand level, whether we are at a supply level, we know how to trade at those levels based off of VIX. So we can see right now we are just kind of consolidating. So VIX had a sharp break below and we are consolidating around that $29 level. When you see something like this, it tells you there is a lot of hesitation between buyers and sellers. No one kind of wants to make the first move, and a lot of times we see a little bit of boring action. I sent this to our private group, as you guys can see right here. So I told them, we can expect kind of a boring day if we just kind of look at the VIX. So we can see the markets are at a level of uncertainty. There's not a lot of panicking, but there is also not a calmness in the market. Traders are cautiously watching and no one wants to make the first move. That's why we see that lower level of volume. That's why we see those lower levels of volatility. We see some choppiness. We see some fake outs, and it's basically a time where you want to be avoiding trading because it's not worth it. Options contracts lose a lot of value. The delta is really low. The theta is really high. It's just not worth it to be risking money when markets are looking like this. So guys, that is my analysis on the trading day for today, and it'll probably be like this for a couple days. So that is all for this video, and I'll see you guys in the next one. Peace.